Start with the trades from the beginning of the week. And those of you in the Discord community, you saw I posted the markup for this UJ trade. I just didn't get to call the signal for it because I got stuck on a Zoom call. Mondays are just a really busy morning. Wait, is this it? Yeah, the 19th. Yeah. Me tripping. It's just crazy because it's like the exact same setup from Monday of last week. Like it literally set up exactly the same way. The Holy Grail. So this is something that we covered on our last call, the Holy Grail setup, right? So what we're looking for here is for price to break trend and structure, right? So everyone could agree that through here, we've really just been trending down, right? We've been making lower lows and lower highs. We've been respecting this trend line structure right here. We finally broke it and we retested it, right? But a trend change isn't a true trend change until price has broken our trend and also a major level of structure. So we're going to look left a little bit. And these are our most significant level like highs, our most significant levels that we need to break before we have a true trend change, right? So price not only broke and retested our trend line, it began to trend up and we broke through that level of resistance right there and came back for the retest. So if we zoom in here, if you guys remember from our call, I believe we covered this on Friday of last week. We want to see a lot of momentum, right? Look how many bullish candles are in a row right there. I mean, that's 1, 2, 3, 4, 5, 6, 7, 8. Well, we won't count that one, but 8 bullish candles in a row that broke through that level. That's a really great sign that we now have a confirmed trend change. We got our pullback and a retest, but it didn't quite retest our trend line. Price pushed back up and then pulled back and actually tested our trend line zone. And we have continuation divergence. So we've got multiple confluent events here. We've got a retest on our 50 moving average. We've got continuation divergence. So price made a low and then a higher low. Everyone would agree that this low is higher than this low, right? So volume should also agree. But if you look down here at our volume indicator, price made a low, but a lower low, even though price made a higher low. So that's continuation divergence, letting you know that price is going to go continue going long. So we've got a moving average touch, a trend line bounce. We've got reverse divergence. We also have a shark fin. If any of you guys have watched Derek Vandy's content on YouTube about the TDI, we've got a beautiful shark fin right through the 50, right where price is testing our trend line and our moving average. So then we'll go ahead and throw our Fibonacci retracement tool from our previous low to our current high, right? And price retrace right down to the 50% retracement level. So we've got 6 confluent events between our, we've got 4 on the chart, and then we've got 2 down here in our volume indicator. We've got the divergence, and then we've got the shark fin. So we've got 6 total forms of confluence telling us that this is a high probability trade setup for a buy. And again, I wasn't able to call that signal. But I did post that markup in our Discord group. I have to go back and find it real quick. Yeah, right here, UJ is starting to set up, and it was just kind of floating in that area. And again, I did not get to call that signal, but that's how these will work. If at any point you guys see us post the markup, and things are setting up the way that we're saying, you know, don't be shy to take that trade, even if we don't call it, only because, you know, there's going to be times where, you know, we aren't able to call a signal just because we're busy doing something. Jamal and I both own and run companies outside of this. So, you know, the morning times can be very busy for us to, you know, be able to call every single signal like that. So, more or less what I'm getting at here is, I mean, you see we had 6 total confluent events, and then look at that bullish move right there. I mean, it just took off. And our original TP, I didn't have it up there. Is that like right in here somewhere? So within just a couple of minutes, you know, take profit would have been triggered. So absolutely beautiful trade. This is the trade I'll take 10 out of 10 times. If you guys can just train yourself to find this particular setup and only trade this setup, you can make a ton of money. Like, it's a ridiculous, like, how much this trade setup wins. I will go as far as to say every time this exact setup happens, I've never once, not one singular time, ever seen this trade setup lose. Uh, you know, I'm gonna knock on some wood, you know, real quick, but I literally have never seen this trade setup lose. So we've covered this trade setup in the last 3 Zoom calls, and I think I'm gonna keep covering it because it happens every single week on certain pairs. So we're recording these calls and posting them to YouTube. You know, go to our YouTube channel and rewatch the breakdown of this so you can really, really learn how to identify these on the charts. And if maybe you want to spend time on a Zoom, you know, privately, hit me or Jamal up, and we can see if we can coordinate, you know, a 15-minute session or something where we can just spend time dedicated to you. To really help you start seeing this setup, because it's so incredibly high probability. Like, I would bet my whole account on this trade setup 10 out of 10 times. It's an awesome trade. And then Jamal, I think the next one, US 30, right?
Yes, sir. I'll share. And yeah, I'm
Hey,
gonna
Zach.
kind of just. Oh, go ahead, Roger.
I just want to ask a quick question. Does are there specific pairs that happens on more frequently than others, or you just gotta just be really looking for it?
It happens on all pairs.
Okay.
It happens the most that I've seen, and maybe it's because I watch UJ the most. UJ is my favorite pair. It's just so
Okay.
freaking predictable. But I see it most on UJ, but that's again probably because I live on UJ's chart. I don't. I look at all the other pairs, and we do markups, and I look for trade setups, but I spend the majority of my time on UJ. But it does happen on Euro USD, Euro Aussie, GBP USD. It even happens on US 30. Like,
Yeah,
it's,
it happens on all of them.
yeah.
You just need to pick the pair that you want to watch.
Focus on.
You know what I mean? And
Yeah.
and I'll get into, I'll kind of actually dive into some of this, just the whole thought process behind how I analyze a chart, because this call, the US 30 call, I didn't mean to cut you off, Zach, but he asked a really good question. And here, let me share really quick while I'm getting into this. To answer your question, my answer would be that it really does happen on all pairs. But if you limit yourself, like I have all these down here, and if you look on my trading view, so I have my currency pairs that I look at, my indices, crypto, and of course the dollar, and these are just random. And I literally never ever click on these unless I just don't like anything over here. Right. That's the only reason sometimes these will be down here, is just to have something to look at. But like this morning on GU and both on EU, first thing I said was, I don't like where they are. I don't like how they look right now on these larger time frames. So I'm not even touching them. Like, this is a 4-hour time frame, and this is just sideways, sideways, sideways. Right. There's nothing in here since December 13th. So for the last 7 days, I don't like this. And if that were to be the case on all of these, I would look into some of these over here. But ultimately, what I'm looking for, Roger, is that same exact setup. Okay, same exact setup. So let me hop in, and I'll answer some of this as I go. Let me hop into the trade that I called yesterday. So yesterday I called a buy on US 30. But what I want to do is I want to start from the top down and really show you all exactly what was going through my mind, how I looked at everything, because I always say this: price tells a story, and it's your job to help narrate that story, because I don't know what's going to happen over here, but I can take very calculated, educated and high probable guesses based on proper analysis. So I'm going to use the replay tool for this because today I don't really care about. We're going to go back to yesterday because that's when I called the trade. And I'm just going to start from, I'm just going to walk you through what I do every single morning. Now, some of these markups weren't quite here yet, but as I dive down in time frame, I'll explain these things. So when you look at the 4-hour time frame, can you guys hear me okay?
Yep.
Okay. So when you look at the 4-hour time frame, I've had some of this structure on here literally for weeks now. I have this top dynamic resistance, and I say dynamic. Trend lines, or excuse me, moving averages are what you call dynamic support and resistance. They're not, singular like this horizontal structure here. But I call this dynamic because it's not horizontal. It's not flat. It's a trend line, but it's still a zone. And this zone, because price is bouncing underneath it, is going to operate as resistance. So I want to identify that, because when price was in this area here, right, if once we didn't know this had happened, very easily price could have said, boom, something, it could have done something like that and stayed within this channel here. Okay. So that's why I have that up there, because you never know what price is going to do. Price decided to break that. And as you see here, I have a lot of zones right here because price is at a really critical part. On this larger time frame, I have resistance, 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 broken. Okay. And I say this all the time on every call. When you want to determine a true break of structure, look for momentum. Look at these candles. Very strong bullish. 4-hour candle, super strong bullish. The next 4 hours, bullish. The next 4 hours, bullish. Okay. That's a lot of momentum that entered the market that broke this structure. That is a true break, as I like to call it. Whenever you see a lot of momentum in your candles breaking an important level, that's what I call a true break. It's not going to be a fake out when you have momentum in the market like that. And then what happened when the market decided to retrace? It tested the same level. Now, granted, as price has moved on, I was able to actually identify this zone, but resistance, 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 broken, turned support, pushed up, came back down, wick, support, pushed up, come down, support, pushed up, come down. We broke not only this dynamic support here that's at an angle, we also broke this vertical support. And I had this support drawn up based on resistance here, support, 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 right? This is so important to master in trading, is confidently and accurately identifying your important areas in price and structure. So at this point in time, let's talk about the current trade, right? Price has obviously broken all of this structure. And again, like I said over here, look what price did when it broke through structure. Strong momentum in the market. Look over here when price broke through all this structure. Strong momentum in the market. Very big bullish candle, or excuse me, very big bearish candle. Very big bearish candle. Very big bearish candle. That is a lot of momentum in the market. Look at some of these other candles, right, that don't have a lot of decision in them. This is very decisive. I want to go down. So it did. Okay. Now in here, we start to lose some of that momentum, right? We start to see shorter bodies with wicks. Price is kind of sideways. So when I called this trade yesterday, the very first thing I looked at was on the 4-hour. I woke up that morning. I started on the 4-hour. First thing I noticed, we have a low with the lower low. We have a low with the higher low. That is reversal divergence. Okay.
All 3 of them, actually.
Yes, you're right. Even if I come up to here.
Mm-hmm.
Okay. That's the first thing I noticed. Now, just because I noticed divergent doesn't mean I'm buying. Okay. Now that I have divergence, this trend line wasn't here. I need to identify some sort of price action structure that I want to see broken before I'm going to buy this divergence. Again, this is just a signal. This is just a signal saying, hey, buy. And a lot of people try to find the perfect indicator that tell you when to buy and sell. And indicators are never going to be that. Okay. So if this was an indicator that told you when to buy and sell, it's going to tell you to buy down here. But price could have very easily done this. Okay. Very easily. So what I'm going to do after I see that is let me identify some structure that I want to see broken before I take this buy signal. So then I drop down in time frame. Now here's what I see when I drop down in time frame. Same thing. Low, lower low, lower lows. Down here, we have low, higher lows, higher lows. This thing is very divergent and it's been divergent for almost 3 days now. Okay. When is the reversal going to happen? So now again, I'm trying to find structure. Price is kind of consolidating. The way I view this, it's wedging up because I could put some structure down here as well if I really wanted to. I could take this wick, I could cut through this, get this touch and this touch, and then come down to make sure I trap these bodies. Structure, when you're marking up structure, it's all about trapping price. Because if price were to, I don't have these two zones extended all the way down here, but eventually at the angle that they are, they would meet. And price could do something like that. But eventually when price is trapped, it has to go one way or the other. Okay. And that's what you're doing when you're drawing your zones. You want to trap price. So I noticed that divergence here. And I have my structure that I want to see broken before I confirm my buys. So in Discord yesterday, I gave you guys a setup based on the 15-minute. Okay. I told you guys right here, US 30 15-minute clear break. Would like to see a solid retrace here with some divergence on the 1 minute or moving average cross. Here's the picture that I shared. And here's where we are at that moment in time. Okay, now I have the replay tool, but we'll show you how this plays out. I want you to notice a couple things here. Like I said a minute ago, when we were looking at the 4-hour, here's the structure that I want to see broken. Notice what happens anytime price comes in this zone. We touch, here's my first touch. We push off hard. We come back up, we consolidate in this zone. As we're consolidating in this zone, what do you notice? I notice a lot of equal highs, but I don't notice equal highs down here. So we sell back off of this zone. That's divergent. Price comes back up to here, pushes right back off. I'm not trading at this time of day. So this move is irrelevant to me at the time that it happened, but I'm going to use this information when I hop on the charts to start analyzing what I think is going to happen. So notice what happens when price gets back up in here. We consolidate a lot. Now, what did I just say a few minutes ago? What do you want to look for when you determine a true structure break, somebody? What am I looking for in a true structure break? Momentum, right? So look what happens when we actually leave. Damn it, I keep double clicking. This big old zone that price consolidated in every time it got in. Look what happens when we leave that zone. What do you see in these candles? That's momentum. Look at all of these candles right here. Small bodies and a lot of wicks. This whole area is indecisive. But guess what happened right here? The market was no longer indecisive. The market said, I'm going long. Strong bullish 15-minute, strong bullish 15-minute, strong bullish 15-minute, and another bullish 15-minute. This is exactly where I posted in the Discord right here when we're at these highs and we broke this level. Now, I had a horizontal level here as well. And I will tell you why that I had this level. Now, obviously, now that price has played out, we know, let me delete this line. We know that price has continued up, but this is confirmed support over here now. Okay, I actually need to go back a little bit further because I hadn't called the trade yet. I called the trade down here once we got our retracement, but let me explain why. Same thing Zach just talked about. A true break of structure, price has to break trend, and we did, and the previous significant high, which was right here. And we did. Okay. So at that point in time, that's when I began to say, let me look for my entry. And I'm going to give you guys a lesson today as well on how I use the fib. But let me finish off this trade and then I'll hop into the fib. So once I noticed price break up here, which again, we looked at before that happened in Discord, I'm going to draw a fib. I'm going to go from the swing low, the start of this strong bullish move, to the highest point that it made. Okay. And I told you guys in Discord, I said, I want to see a solid retracement into the 618, 786 level. And I'm going to explain this Fibonacci. I'm going to explain the colors and how I use this. This is my buy zone. These two blue lines, or let me say this. This is my entry zone because it could be a bearish setup as well. But these two blue lines are my entry zone. Price is in my entry zone. Okay. This is where I want to look for an entry. I called the buy. I'm not going to go through the exact, wrong tool. I'm not going to go through the exact prices. You can find those. If you want to go back and like mark this up yourself, you can find it right here. Here's my entry, my stop loss, my take profit, and I had it posted right there. So this is a great trade to go back and practice because this is, again, kind of one of those holy grail setups. We broke trend, a really big trend zone, and we broke our previous significant highs. Once we get into this buy zone right here, that's where I take my entry. So right here, somewhere in this area, again, you can go back in Discord to get the exact price. I took the buy. And on setups like this, we broke trend coming down and we broke this resistance here. I always target TP2. This is my TP2. This is why I placed the take profit that I placed. Okay. But I want to show you a couple more things before we get too much into the field. So we broke trend, we broke resistance, we got our pullback to that 618-786 level. I'm really looking for buys. When I drop down to the smaller time frame, I even said this in Discord. Okay. I said, would like to see a solid retracement, which currently we have. We have a very solid retracement. And I would like to see divergence on the 1 minute or a moving average cross. Now, ironically, both these things obviously happened out because the trade played out. But I want to show you again my thought process as this is happening, because I don't think there's a lot of education and content out there of what's going through someone's mind as the trade is active. Okay, so you guys now understand why I wanted to buy. You saw the structure that we broke. Now let me show you what's going through my mind as this is actually playing out and actually happening. At this point in time, we were in drawdown. And if you're an emotional trader, you're not experienced enough, you were closing right here. This strong bullish candle, you were like, oh, I'm wrong. And you closed the trade. Okay. But I literally said on the 1 minute, I want to see divergence. We have a low with the lower low. We have a low with the higher low. I want to see that. That's also at the same time happening right on this trend line. And if you go to a larger time frame, you're going to see this zone of a trend line that we have here. We're bouncing structure, trend line structure with divergence on the lower time frame. Perfect. That's what I want to happen. As this trade continued to play out. Ah, shit. Give me 1 second. Click the wrong button. Sorry about that. All right, we're right in here. Okay, so we have the divergence on the 1 minute. Okay, now I started from a 4 hour. Keep in mind, 4 hour, we had our divergence. 1 hour, we had our same divergence. 15 minute, we had a trend line zone and the previous significant highs right here, this structure, which is resistance, broken. Okay, so once we drop down to the minute, first thing that we wanted, that we got, divergence. Okay, as this started to play out, I want you to notice something. I even marked this up in the Discord. This becomes a level of resistance. But this is also a head and shoulders pattern. And the reason why I want to point this out is because a lot of you probably know this pattern. A lot of you probably know what divergence is. You know what time frame confluence is. You know what moving average crosses are. But again, I'm trying to walk you through a trader's mindset and how you apply all of this knowledge that I know that a lot of you guys have and implement it into a particular trade setup. As this was playing out, I saw this formation. Okay, very easy to see. Strong momentum. Again, when you want to see a structure break, price is trending. Momentum. When you see a lot of momentum in the market like that, you know that structure was broken. So we get a sharp push down, make a low, pull up, find some resistance, push down, make a lower low, come back up, test the same resistance, come back down, make higher lows, and then we break it. That's an inverted head and shoulders. Shoulder, head, shoulder. That's another level of confluence that happened in the midst of being in this trade, which gave me even more confidence. Shortly after that, we got our moving average cross. Okay. And then from there, we ended up hitting take profit. It ended up taking, I called that trade. Let's see. I called that trade.
Yeah, pull Discord onto the screen so you can show them.
Oh, I've been going back and forth between that. Y'all can't see it?
No, you've only been showing your chart.
Ah, okay. Yeah, I've been flipping back and forth between Discord and my chart. I didn't know that you guys couldn't see that.
Oh,
so
yeah.
Yesterday at 10:08, US 30, 15-minute clear break. Would like to see a solid retrace with some divergence. And I shared the picture. Price had broken up here. We wanted to see it retrace down in here. Then I called the entry, right? In my zone, the blue lines, that's my entry zone. Here's my entry, my stop loss, my take profit. Right here, got our 1 minute divergent. Now just need a moving average cross. There was our divergence. Shortly after, I marked up the head and shoulders pattern. This is all happening live time, 10:51. Nice little inverted head and shoulders with the neckline break and our moving average cross. In profit, let's see how this plays out. There's no way that when you have this much confluence, you lose, right? And then shortly after, I guess it was at 7:23. So this was an intraday setup. I called it at like 11 a.m. Didn't hit until 7:30, but who cares? In the same day, I mean, we made 250 pips, and all we did was use the same confluent events that Zach just went over in the UJ trade, that I just went over in this trade as well, right? Now, before I move forward or we open it up for questions, I want to show you guys how I use the Fibonacci, because a lot of there was questions in our Q&A about that. And then after I cover that, we'll open up this concept right here, how we trade this particular setup, or anything about the Fib. We'll open up for questions. But let me go to a naked chart where I don't have anything on it. First things first, the Fib. A lot of you know about it. A lot of you probably use it. You've heard of it. But I'm going to show you how I used it for the particular trade that I used it on. And you know what? I'm going to actually just do it on the trade that I called, so you guys understand as I'm going through it. That way you see it, just how I saw it. So this is a 15-minute time frame. When I called the particular setup, price was right here. Okay. So the first thing I did, once we broke this trend line, once we broke this resistance, I threw a Fib on there. That was the first plan of action. I went from my swing low up to the highest point that it made before it started its retracement. Now, what I look for using Fibonacci's is I look for a 618 or a 786 retracement level. What these numbers represent over here is, one represents, these are percentages. Okay. That's why they're 0.0 this. One is going to be 100%. Okay. So we're measuring point A. This is point A right here. This is how Fibonacci works. This is point A, and I'm measuring to point B, the start of the retracement. And think of it like a measuring tape. Think of like a measuring or measuring. What is it called? I can't even think. Measuring tape. Yes, that's what it is. Okay. Let's say this was 100 inches long, this move. Hypothetically, this is 100 inches. What this means is if price pulls back to the 50 level, that means it retraced 50% or 50 inches back. Okay. That's what these percentages represent. A 0.236 retracement means that price from this full measurement retraced 23% of the way back all the way to 100, right? So if price had pushed up from point A to point B and came all the way back, that's a 100% retracement. Okay. What you want to look for in an entry, whether it's a buy or a sell, is this blue zone, a 61% retracement or a 78% retracement. It's just, it is what it is. I can't fully explain it. It's how the market works. These are the gold. This is the golden area for an entry. Price is always going to expand and contract. It's like breaths. It breathes out, it inhales in. It breathes out, it inhales in. It breathes out, it inhales in, right? And what you'll notice on a lot of these breaths is this breath out where it stops. This will always typically be anywhere from a 50 to a 786 retracement. Ideally, we want to enter in the 618, 786. But when price pushes past it, that next breath, that typically is always a 618, 786 retracement, is a retest of the previous high. Okay. When you break structure and you retest it, that retest 90% of the time is going to be in this zone. For the ideal entry, it will be in this zone, right? If I shrunk my chart up some and I continued this pattern and did the same thing and came down, we're going to test right off of these highs here. And this retest is going to be a 618 or a 786 retracement. It really never fails. And if it does, don't take the trade. Okay. Build a set of rules for you. So I'm looking for an entry in here. Once price came down into that area, that's when I was like, all right, let's take it. And I went down to a 1 minute just to confirm some other confluent things. But that's how I knew to enter in this area. Now, once I determined where I want to enter, in a setup like this, where we're breaking all of this structure, we have all of these confluent events, I always target TP2. So if we enter right here, the next thing that I'm doing, let me remove these circles because I don't actually use those when I'm trading. I'm going to throw on my position tool. Okay. I'm going to throw on exactly where I'm entering the trade, and I'm going to take this and I'm going to place it on TP2. These green levels, TP1, TP2, TP3. That's why they are in green. Now, the reason why the previous high, which is your point A to point B. So the reason why point B is always TP1 is because, again, we can't predict price, but price could have done this. What would this have been called? Somebody, what is this called? If price would have pushed up to this equal high and then turned around and then started making lower lows, what is this pattern?
Double top.
That's double top, right? Every single one of you know what a double top is, but how many of you are actively thinking, hey, price could do that? And that's how you have to really learn to think to be a successful trader. Is like, so this is a conservative take profit because price could double top right here. I don't know that, but I know that that's a common pattern, happens all the time, and it could have happened. Okay, so that's why this is always take profit 1, because price could always decide to turn around there. This is a great place to either protect your entry. It's a great place to close partial. So if we enter down here and price got up here, close half, protect the entry, leave a runner. Or just close if you want to. You can go for just the take profit 1. But let me actually undo this so I can continue. All right, okay, so I always go to TP2. Now, once that has been determined, okay, the next thing I'm going to do is I'm going to readjust this Fibonacci level. Now I'm going to take point A starting line, which is right here, and I'm going to drag it to where my entry is. My entry is right here where, let me zoom into this so I'm actually making it a little bit clearer for you guys. My entry is right here where the red and green intersect, okay, because the green is the places that I'm going to be in profit. The red is where I don't want it to go. That's my stop loss. So I'm going to drag point A of my Fibonacci to where my entry is. And I'm going to take point B where the previous high is, and I'm going to place it where I want to trigger take profit. Take profit is going to be identified as this green box right here. So I'm going to take point B and I'm going to drag it to there. So now my fib, just to recap that, my fib was originally placed on point A, which is right here, to point B, which was right here. That's where these lines were set up as. And the reason why they were there is because I wanted to measure, just like a tape measure, I wanted to measure this 100-inch move, hypothetically, to see how far it retraced back. And we retraced 61 to 78% back. Once I determined that retracement and I took my entry, I now adjust that fib and I move the starting point A to where the entry is and point B to where I want to target take profit. Once that has been done, now I'm identifying my stop levels. That's where these red lines come into play. So now I have this tool on here and I say, okay, this is where I want to take my profit. Where within these red lines, this is my stop loss zone. I consider it a zone. Where within this zone can I place my stop loss and still target a 1 to 2 risk to reward? Right? So with this, man, it's hard to get precise right here. So I could place my stop loss as low as this point here because it's within my zone. If I ever have a 1 to 2 risk to reward that is outside of this zone, I will not take it. I just won't take it. Okay. A 1 to 2 risk to reward, I have to be able to create within these red lines. So right on this line here, that's a 1 to 1.5. I can't take that. That means I'm risking $100 to make $157. It's got to be 1 to 2. So at this particular point right here, I'm at a true 1 to 2 risk to reward. So the fact that I'm able to take a setup, risking 1 to make 2 within this stop loss zone, this is a good trade that I'll take. I'll take it every single time. If I lose, it is what it is because risk is calculated. However, when I looked at this support over here, I wanted to capture the most touches. So we got some wicks, a fake out. We got a lot of body closes right here. We have a big fake out, and all this wick right here did was test this previous little area of resistance right here. Again, anything that's broken structurally will retest. So even though this was a small level of resistance, price, of course, had to retest it. But I put my zone where the bodies were. Okay, I want to get the most price. I don't care about all of it. I want to get where the most price is active. Okay. So I noticed that the zone was here. So I was able to actually take my stop loss and push it up a little bit more and yield an even higher percent return. Because if you go to Discord, let me flip back here. If you go to Discord, you'll see that when I called this trade, I said 1 to 2.76 risk to reward, because look where my stop loss was. My stop loss was right below these bodies. Okay. And that was based on this zone that I had marked up, and the fact that I had a 1 to 2 risk to reward all the way down here. So if I can target something better than the 1 to 2 and still be confident with how much room I'm giving the price to breathe based on structure, of course I'm going to. So that's why I had my stop loss and my take profit based on where I had it. Okay. And as we all know now at this point in time, the way price played out is we triggered TPs for 250 pips. This is the same. This trade setup is no different than the trade setup that Zach was talking about on UJ, no different than the trade setups that we've talked about over and over again. And we're going to continue to talk about them over and over again because it works. Okay. And all it is just simple price action and being patient. Now, that was a mouthful. I know that was a lot. I want to open it up for questions for a little bit because, again, I kind of went through that quickly, but I want to know what questions you guys have either about that particular trade setup or about how I use the Fibonacci more in depth.
Yeah. And guys,
Zach, if you have anything to add.
Yeah. And just don't be shy. Like the whole purpose of these calls is for you guys to be able to use us as a resource to help you get better at trading. So, don't be shy. If you don't want to take yourself off mute and ask, throw it in the chat or just take yourself off mute.
You said you are going to post these so we can watch them again?
100%. Yeah.
I think the more I watch it and the more repetitious I think that we do this and see it and see it and see it and see it and test it, I think it'll click more naturally, I think.
100%.
Yeah.
Check this out.
I appreciate the breakdown. This is perfect. I mean, I don't think I've ever had it explained like that before.
Yeah.
I'm going to show you. I was actually, before the call, I went to a different chart that I don't have marked up at the moment. And I went to the next chart. I was like, let me just find a couple examples that help illustrate this even more. And I'll show you. Okay. It happens all the time in price. It happens the entire time with price action, right? Down, up, down, big up, right? This big up right here broke a lot of stuff. It broke trend line zone. It broke these previous highs, right? Structural breaks. Now, once that's broken, okay, if we measure with the fib from our swing A, our lowest point, to our swing high, our highest point, look at this entry zone. Perfect 618 retracement, 786 retracement, or right in that area. You place a buy right there. I place it on TP2. Now, one thing to note about TP1, TP2, TP3 is their Fibonacci levels. Look how TP2 lines up perfectly with this previous high over here. I mean, it's the same exact line. If I dropped a horizontal line right on this green line, look left. Okay, this is a tool. This toolbox are tools that you can use to help make your job easier. It's like building a house with or without a hammer. I'd rather have a hammer because it's going to make it a little bit easier. Fibonacci is going to make your life a lot easier, right? So I place TP there. So now I'm going to drag this to my take profit level, and I'm going to drag this to my entry level, which let's just hypothetically say we enter somewhere in here. And now we have this entire zone, these red lines, to create a 1 to 2 risk to reward. As it sits right here, that's a 1 to 2.15. We could leave our stop loss way down here, which is plenty of room to let the trade breathe. Okay. And that's a really big mistake that a lot of traders make. They're not willing to give the trade room to breathe. Okay. You have to be okay with drawdown. You have to be okay with allowing price to breathe, expand, contract, expand, contract. You have to be okay with that motion, right? But in any sense, we could actually even bring this a little bit higher and target a 1 to 3. And again, I'm going to do that based on structure. I may look at this high over here, or I may have just left it right here and had all the way with the bottom of the zone a 1 to 2. And look, price hit TP2, came up and just bounced off of TP3, bounced off of TP3, bounced off of TP3. On a higher time frame, that's going to be a wick above TP3, and then it fell down, right? It just happens over and over and over again. Look right here. We're pushing up, making highs. Okay. We have clear structure right here. A lot of touches. Touch. Price breaks that. the previous support, price breaks and turns resistance. You can do this a lot of ways. If you're aggressive, you caught this first trade here. But again, a true trend change, price has to break trend and break consolidation. Once we get, and again, once it breaks, what do you notice in these candles right here? What do you see? Momentum. Momentum. Strong bearish, strong bearish, strong bearish. Okay. It's a lot of momentum in the market. Once that happens and you start to retrace, swing high, swing low. Bam. Perfect 618, perfect 786 retracement. You know what? Let me snag an entry. Let's say my entry is right there. I want to target TP2. Look what happened when price actually hit TP2. It said, skirt, turned around. These levels don't lie. Okay. You don't have to be a rocket scientist to know how this works. You just need to know how to use the information. I could care less why a negative 0.27 happens to just be the level where price is going to react when using this tool. Irrelevant to me. It just works, right? Once I've identified that I'm entering, once I've identified where I'm taking profit, I'm going to take point A and I'm going to put it where my entry is. Here's my entry. That's why I have this line in my Fibonacci as a light gray. So I always can line it up with my entry. That's my entry. Now I'm going to take point B, the very first green line on my fib, and place it where I want to have my take profit meet. So now here's my stop loss zone. At this particular point, if my stop loss was left exactly right there, that's a 1 to 2.76 retracement. Now check out how this stop loss level works. If I put horizontal lines on each of these levels, this stop loss level happens to be right above the current high. This red line happens to be right above the current high. If I place another line on this stop loss level, this line happens to be right above the previous high right over here, previous highs. If I place a line on my stop loss level 3, look left. Okay. Why a 1.618 or a 1.272 or a 1.127? Why? Couldn't tell you. Don't care. But it works. It lines up. So this stop loss level 3 is going to be 2 previous highs. Stop loss level 2 is your previous high. Stop loss level 1 is your current high. So within the last 3 highs, I have to be able to confidently take an entry and target a 1 to 2 risk to reward going to TP2. Up here, that's a 1 to 1.63. Can't take it. But when I get right here, I'm confidently with plenty of room to breathe. If price comes way up here, I'm wrong on the trade. Price is now going bullish because it broke these highs and it broke these highs. I'm just wrong. But I've given price plenty of room to decide. And I'm still risking 1 to make 2. Okay, that's a great risk to reward. However, I'm going to look left and say, okay, I see this little zone in here. I may place my stop loss right above these highs over here. And now I'm targeting 1 to 2.86, even better for me. Makes sense?
Jamal,
it literally happens all the time.
Jamal, can you go back to
that screen?
Yeah. And then put on your the red and the green zones that you had in there, just right where you had them, like where you had your stop loss and your take profit. I want to ask you a question on that.
Yes, sir. So if we entered somewhere in this consolidation right here, the perfect entry price we're not talking about.
So my question is, if let's just say that's that setup where you had where the 1800 is on that bearish candle, keep going to the right a little bit more, no, too far, back to the left some, big long candle right there. So if my stop loss is up there, can I not take that stop loss and move it into TP1 and then just leave it there? And then when it hits TP2, I can drag my stop loss to it and let it keep breathing and let it keep running. Is that what you're talking about?
100%. There's not, once you're in profit, it's up to you how you choose to manage the trade. Okay. But so again, let me redraw the fib really quickly. The Fibonacci, our entry is determined based on, let me actually get rid of everything else because I just want you guys to see nothing but price here.
Does that question make sense? I guess. I mean, because when I start getting into profit and I see that it's going to hit my TP1 and it goes to TP2, if I pull my stop loss to TP1, I don't take the profit, but I put my stop loss there. If it comes back and taps it, I'm winning.
You're risk free. You either win a little bit, but at least you lose nothing. In
Right.
trading is not about making money. It's about protecting it.
Yep.
Period. I don't care what anybody says.
You can't blow an account or go broke by closing profits. So
It's about protecting it. It's not about making money. Okay.
I
But
guess what I'm asking you is, do you just let that run and then you just it automatically
it
closes
really
out?
it really depends. And it depends on kind of how. So when I was breaking down that US 30 analysis, and I started on the 4 hour and went all the way down to a 1 minute. I went so far down to a 1 minute that I showed you all an inverted head and shoulders pattern on a 1 minute to confirm an entry that I was in based on a larger time frame. That could work inversely. I could be in a trade, but a 1 minute time frame be telling me that it's time to get out of the trade. Right. And that's why I wanted to show you guys everything that I was looking at in that US 30 setup. Like, I promise you, go back and watch this call later. How I went through every time frame is what's actually happening in my mind as it's playing out. Because again, at this point in time, you have no idea what's going to happen over here. No one does. And the thought of that is why so many traders lose, because they get psychological. They get in their heads. They want to know exactly what it's going to do. But the fact that you don't is going to cause you to naturally make emotional decisions. A Fibonacci, you can't make emotional decisions when you're using numbers. It's mathematics. It's science. It's like you become your own EA. You become a robot. You can't fuck this up if you're using science. Okay. Go ahead.
And to build onto your point a little bit and clarify on Roger's question, half of your job is your initial analysis and taking your entry. The other half of your job, and the other half of your job is trade management, which is just as much analysis, because things could look perfect, like Jamal was just saying. Things could look perfect for your entry. You go ahead and get in that trade, and then an hour or two later, you start really looking at things with how it's played out thus far, and there could be a lot of things telling you to just go ahead and close that trade, or that it may not hit your take profit too. So once price gets X amount of pips in profit, then we'll go ahead and protect our entry or protect a little bit of profit. Just like that trade earlier this week with the Euro Aussie dollar that Lee said that he took. It was playing out really nicely. And, about 20, 25 minutes into that trade, we started to see a lot of rejection. So I told everybody I was moving my stop loss to protect 10 pips. That way, worst case scenario, we get stopped out at 10 pips. And that's exactly what happened. So risk-free trade and still made a little profit. So just trade management is very crucial.
No, absolutely. And to continue to answer your question, Roger, I'm going to tell you a couple things that you can do, right? This setup, you can literally place sell limits on these two lines. Sometimes I trade that way, right? I know price is right here and we are retracing up, but I may not be on the chart at that time. I'm going to place a sell limit right here on this blue line. And once it gets hits, I'm in the trade. So let's hypothetically say I enter. Let's build you a rule book hypothetically. Let's say when price hits the 618 level, you enter the trade. So right here on this candle, let me zoom in. This is rule number one. We broke structure. We broke this trend line going up. We broke this resistance, came down. A lot of momentum in the market. Now we start our retracement. Cool. Now that we're starting to retrace, rule number one, I need to retrace at least to the 618 before I take that trade. Perfect rule. Anytime I hit the 618, I take the trade. Once I've taken the trade, now let me determine where things need to be. There's my entry. Here's where TP2 was. So I'm going to drag this to TP2. Here's my stop loss zone. Rule number two, I have to, within these red lines, have at least a 1 to 2. If a 1 to 2 is way out here, can't take the trade. Okay. But luckily, right here, I'm able to target a 1 to 2. Maybe that's just the rule that you leave. I'm going to always make it at least a 1 to 2. And then as you build these rules and you start to take this trade and let it play out, you begin to know what happens more often than not. And you have the confidence to say, you know what? I'm going to target a 1 to 2.8. I've seen this play out too many times. Okay. Now let's say you're in the trade right here. What you should do, to your question, go ahead and mark up your previous low. Okay. Go ahead and mark that up, because that previous low based on the fib is going to be TP1. Okay. It's going to be TP1. So as price starts coming down, there's several ways that you can manage that. Let me put a fib back on the original move, which is right here. You can create a rule that says once price closes back below the 23.6, right here, once price, well, still didn't close below it. Boom. You can have this rule. Once price closes below the 23.6, I'm protecting my entry at the 50 level, or I'm protecting my entry at the 38.2 level, right? This makes it easy for you because these numbers, again, they're mathematic, and the science behind it is really just based off psychology, because again, all trading is psychology. Market
And you're
moves
giving it room
because
to
people
breathe.
do what?
You're giving it room to breathe.
You're giving it room to breathe. My recommendation, if you want to start trading based off of the fib,
Why
if
did you hit me?
you get a first and first, what I mean by that is Zach and I, this is our favorite setup. A first and first represents your first trend change. So you get that because of the trend break and the support broken. So that's your first trend change. The second first is your pullback. Zach and I like to call that the first and first. Your first trend change, your first pullback. That trade, 10 out of 10 times, is going to go to TP2 and sometimes TP3. My advice as a new person trading that setup, let it happen. Don't move your stop loss. Don't move your take profit. Let it just get hit. And 9 times out of 10, you're going to hit that TP. I guarantee you a lot of people on that US 30 trade that I called closed really early. Right? I guarantee you. But I just knew it was, I never once told anybody to close. And I wouldn't have, because it was a first and first. It was our first trend line break, first break of this structure, got our 618 retracement. We go to TP2. It just happens. And I've traded that setup so many times and I'm confident in it to happen. But if you don't have that confidence yet, right, to your question, 100%, when you get to TP1 at the latest, protect your entry. At the latest. And the reason why you want to protect your entry at the absolute latest at TP1, and TP1 is always going to be, it's always going to be that previous level, is because of this. What did I show you guys a minute ago? What could price do right here at TP1? Price could, boom,
double bottom.
Double bottom. So that's always the first place that I'm deciding to protect at all, unless I'm just not confident in the trade. If I'm not confident in the trade and I was just looking for a reason to take something, because again, I'm a human as well. And sometimes I do get trigger happy. And sometimes I just want to be in a trade. We all get that way. Then yes, I'm going to protect a little bit earlier because I'm being dumb anyway. Trading's not about making money. It's about protecting it, right? So yes, I'll go ahead and protect that entry. But if you're taking the trade based on ground analysis, a lot of confluence, and a trade that's particularly just like this, hold it. Because look what happens over here. Same exact thing. We're trending down at this point in time. We have our previous significant high. Price has broken it. We have a little trend line. Again, you could drop down in time frame and mark this up. I'm just trying to give you a quick visual. Okay. Price broke that trend. The reason why I don't just buy right there is because price could say, see ya. But then it broke the previous highs. Once it's broken those previous highs, let me just go ahead and throw a fib up there. Shit, why not? Oh, it's in my entry zone. Let me throw my tool on here. I'm buying right off the 618. That's rule number 1 that we just established. I'm only entering off the 618. Cool. I'm going to target TP2. Cool. Where does my stop loss need to go? Let me drag this to TP2. Let me drag this to my entry. And now anywhere within this red zone, I have to be able to find a 1 to 2 risk to reward. Right now I'm at a 1 to 1.85. So I got to move up. Boom. Right there, I'm at a 1 to 2. This price never comes close to it. And then bing, TP hit. Now, once price got right here, once price reached right here at the previous high, I'm going to protect. Why? Because before any of this happens right here, and it kind of started to do it. Let's hypothetically say you took a buy down here. You know how many people are closing because of this? Because look right here, we have a high with a lower high. Okay, you have a high with a lower high. Down here, you have a high with a higher high. You know how many people closing the trade right here? All this was a retest to confirm this support. That's all that is. And then price, boom, TP triggered. But you know how many people got out right here? And the banks do that intentionally. But the reason why you don't get out right here, because this could have been a double top. But again, if you want to be safe, take profit right there. Go ahead and take profit. Don't wait for it to retrace and then sell. Now you just lost a lot of money. You left a lot of money on the table. The reason why we're confident on this retrace right here is because we broke trend and we broke the previous high. Okay. When price is right here at this place, when price is right here, we have a true trend change. At this point in time, I don't care about anything else. We've broken these high, lower high, lower high, low, lower low, lower low, 3 lower lows, 3 lower highs. That's a trend. We break that trend and we break the previous high. I'm only looking for buys at this point. If you want me to look for sales, I need to look for a trend break and a previous low break. Does that make sense? Again, I know that's a lot of information. Also, why Zach alluded to, if this is something that you really want to know more about, we can do a personal call with you all. But that's how simple it is. And the way that you really get to it being that simple is just being a master at marking up your chart. You don't need a lot of indicators. You don't need a lot of nonsense. Look for your major areas of structure, whether it's horizontal or diagonal, mark it up and be patient.
And you just got to put in the reps. You know, it's just like strengthening any muscle, like putting in the reps on the chart to be able to identify that setup and confidently trade it. And then
I know that was a lot, so I apologize.
Yeah, I want
No,
to
that's good. Good stuff.
open back up to any questions people have. If you have any questions, again, use this time to really
Get in your bed or lay down. If you move and get up, I'm going to spank your bottom. I'm tired of having to repeat myself, Sailor Joy.
I got a question for y'all.
All right, go ahead.
No.
So you know how you
You're
can
not-
categorize
Mommy,
like setup,
not
like
listening.
an A setup,
You've been
B setup.
disobedient.
Hey, hang on one second. Hey, Zach, can you
Yeah, I muted him. My bad. Go ahead.
So like you know how you can categorize like an A setup, B setup, C setup.
Uh-huh.
Are you guys? Would it be better just to take the A setups, even though there's fewer of them, or still do y'all still categorize like A, B, C?
So that's something that we kind of covered the last week and our call on Sunday of this week is, you know, it's this time of year. It's December, it's the holidays. The market is fairly stagnant. There's not a ton of volume. So there's no reason for us to give back all the profits we've made all year by taking less than A setups. Like, you know, I want an A or A plus setup before like I take an entry. So last week we only called 5 trades, but we made 400 pips. And then a trade we called the week prior for like 300 and something pips also triggered last week. This week we've only called 2 trades, but both trade setups were A setups. And you know that we're at 260 pips with only 2 trade setups this week. So
let me also add to that really quick.
uh-huh.
Great question. Let me ask you this: which one is going to have the higher probability of winning? Do you think?
A setup.
A setup, right? So check this out. The buy that I called on US 30 was an A setup. Agreed?
Agreed.
Because we finally broke trend and we broke that resistance. But get this, on a 4-hour time frame, a buy is counter trend. Why is a buy counter trend? Because what has price just done? Price has broken this trend and it's broken this resistance. Right? We're in a downtrend now. So based on the 4-hour, I'm looking for sales. So my point is you can still always take A setups and still get just as many of them. You just need to understand time frame confluence. So now here I am on the 4-hour. And when price, I mean, you could do the same thing here. You could do a fib. I don't consider this real price up here. I'm going to try to get more of the median. I'm going to capture it in here, come down to the lowest low that we made. And you will see a retrace, maybe a wick up here on the 618 and the 786, which will also be this trend line, right? A break and retest of that trend line. And then we're going to start looking for sales based on this time frame. And that would be an A setup for the 4 hour. But I also got the buy down here based on that A setup on the 15 minute, right? And the reason why I'm still confident in sales here is when you go to the 15 minute, okay, price is still within this 4 hour zone that I have here. But look down here. We'll use this. Where is majority of the data operating? My Bollinger Bands, my TDI, which is represented as the RSI, and that green moving average, they're all above this white line, which is my 50. They're all above the 50 mid level. Okay. So that means price down here, if I use lines, so you guys can see it from a structure standpoint, right? Here's all our highs. Here's all our lows. We're consolidating. But what's price doing up here?
Uptrend.
Strong trend. So we got a super strong trend, but momentum is very stagnant on a 15 minute. And I caught this trade because it was an A setup, right? But when I go to my 4 hour, I'm looking for a place to enter an A setup for a sale, right? And that's a strong tool. And the reason why I'm still confident in that is look what the data is telling me here. We are extremely overbought. We have operated in this range, and from an oscillator standpoint down here, the entire time this has been pushing up. And look what price is currently. Okay. Now, again, this is how you use all the information that you know about trading. Now we have a pattern right here. We got a nice little pennant, wedge, depending on whatever you call it. I don't know the exact definition of all these things. I don't need to know because I know that that's a pattern. Again, whether you know that this is a pennant or you know that this is a wedge or you know it as a triangle, I know how to trap price. And that's all the hell you need to know how to do. Trap price. High, high, high. Let me put a fucking line there. Low, 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 low. Shit. Let me put a line there. I give a damn what it's called. Price is trapped. And when price breaks out of this, whether it's up here and does that, or whether it's down here and does that, I'm going to catch it either way. Give a damn if I'm right or wrong, because whichever way it is, I know based on a higher time frame, we're going to be moving that direction for a while. If on a 15 minute, it breaks long, we're going to go test the bottom of this trend line. Why? Because on a 4 hour time frame, here's that same trend line. Here's that same trend line. Price would just be retesting it. But also on a 4 hour time frame, price could just be retesting this horizontal resistance and decide to turn around and come down. I don't care which one it decides to do because I'm dialing down in the time frame and I'm going to catch that A setup if it decides to break. If it decides to break, I'm catching that A setup for the reversal on the 4 hour time frame. If it decides to continue, I'm going to get on this retest because you know what this retest right here is going to be?
An A setup.
It's going to be a 618 to 786 retracement, testing this previous structure, and it's going to go up, and I'm going to take profit off of TP2. Depending on if I'm feeling frisky, I'll take it off of my zone.
Frisky.
But my point is A setups are always going to yield the higher probability setup. For 3 years, well, I can't say 3 years because I've been trading a little over 3 years. For a year and a half, I care too much about catching every setup.
That's
right.
me.
I want to catch those C's, but catching those C's is sometimes where you catch those reversals. And when you focus only on A's, you start to use the entire story. Price doesn't just tell a story on one time frame. Okay. Price as a whole tells a story, and you have a lot of different microscope and lenses, however, whatever analogy you want to use. I can look at price on a super zoomed out view, or I can look at price under a super finite microscope. And whatever price is doing on here, whatever patterns it creates, it has the potential to create on a higher time frame. But you just have to understand that even on the daily, okay, even on a daily time frame, look left. Okay, we have high here, high here. Did price break it? Yeah, right here. And a lot of you are probably like, oh my gosh, price broke here. It's going to buy. But what do you look for when you break structure? Momentum. Let me see 2 or 3 bullish candles right here. Not just one. That's not a lot of momentum. Price turned right back around. But if this closed and then another one closed and then another one closed after that, okay, guess what I'm saying now? We have a nice structure break. Now, since we have that nice momentum structure break, let me throw a fib up here, come down and retest this area of 618, 786, previous resistance, now support, and look for my buy.
Yeah,
Okay?
and I think that was
I know
me. I kept taking C setups, B setups, especially, on a funded account or something like that. You want to get your trades in, like
Yeah,
you
if
said, we're
you're trying to
evening, so you
pass it,
gotta,
you're going to be taking some trades for sure.
and I was having a problem just waiting on A setups, and that's why I was asking, like, man, should I just keep on waiting on A setups, even though there's less? But 9 times out of 10, they always have more reward, and you're more confident in the A setups.
Yeah.
Bro,
And they're
it's
going to
the thing.
yield higher risk to reward ratios. And when you do that, okay, maybe I only get 2 setups this week, but they're all 1 to 3, and I win them both. I made 6% this week. Okay,
Yeah.
if I do that 2 weeks in a row, no matter what prop firm you go with, you beat the challenge in 2 weeks. They give you 30 days, so you don't got to. Everyone tries to rush and do it in like 3 days or a week. Like,
Yeah.
take time. You got all the time in the world.
Right. And most prop firms nowadays, if you don't pass it in the first 30 days, but you're profitable, you get to retry it for free anyway.
Yeah.
So it's like, don't rush. Like what happens is people will be in profit 6, 7, 8%. And I know this because I work for top tier. I see it all the time. Like they'll be up on the 20th, 25th day, and they're not there. And that last day, they try to hurry up and get there and end up blowing, like they hit their 5% max loss. And it's like, bro, it's like, do you need the money so badly? So do you need this funded account so desperately or so badly that you're not willing to wait another 30 days? Because when that 30th day hits, if you're in profit and you didn't hit your max daily loss or violate any of the drawdown parameters, you're going to get a free retry. Just start over. Or even some firms offer a time extension. So if you have 2 days to go and you're like, damn, I'm still 4% away, pay for the extension, get an extra 15 days and try to hit it. Right. So it's like the prop firms, they just definitely add to the level of psychological warfare that you already are fighting with by just being a trader. You already have so many psychological things that you have to combat while trading. All prop firms do is add to that. And if you can recognize that and you can understand that, hey, they're just trying to get in my mental, and you stick to what you know how to do. If you know how to find A setups, why aren't you only taking A setups? Think about it, right? Like if you are a skilled enough trader to identify and recognize an A setup on the chart, why would you take anything else? No one has an answer for that because of greed, because of FOMO, because of all these emotional factors. You want to be in the market. You want to make a 6-figure trade. You want to have this car. You want to do all these things, whatever the case may be. It's like, if you know and are skilled enough to take only A setups, why aren't you? Right? That's just a discipline thing. So it's like, do it. Just do it. You feel me?
What helped y'all with discipline?
A lot of failure.
Yeah. It's like,
Like
you got to do
losing
it.
a lot of money. Losing a lot of money.
Yeah, you got to do it over and over and over and over again until you're like, all right, fuck this. I've had enough. I'm tired of making the same fucking mistakes over and over and over again. Like, I did a video on that not too long ago. It's like, how many times are you going to make a mistake and be like, I shouldn't have done that. I'm not going to do that again. And then you turn around and do the same shit the next day. It's like, eventually you're just going to hit that point to where you're like, all right, I'm going to quit fucking around and I'm just going to do this the right way.
Right. Yeah. It's really that simple, like, and that's what it came to for me. It's like, I literally had to ask myself that question. It's like, I know how to identify this setup, and I know that this setup wins all the damn time. It's easy. It makes sense. It's perfect. Why am I doing any of the other shit? Why am I trying to scalp the open over leveraged? Why am I breaking all the rules that I know not to break? And if you can't confidently answer that question, and right from wrong, you're rational enough to know that, again, from a trading standpoint, it just makes no sense. So it's like, that's how we learn to become disciplined. I lost a lot of money trying to learn discipline, and I decided that I was done doing that. And if that's something that you do, eventually you'll have your crossroads where you do the same thing or you don't. And so you end up having to quit trading, because that's literally what separates people that make it in this industry and people that don't, are just willing to accept that this is not a race. It's a marathon. It's not about making money. It's about protecting it and just being patient. Only take the A setups. You're going to have a nice year. Promise you.
Y'all
I
fucks me up because I run marathons. I still struggle with that shit.
I
Well,
appreciate
hey,
it, though.
I didn't say you wouldn't struggle. Struggle is a part of it.
But you're going to finish.
Yeah.
But again, and that's why Zach and I beat this particular setup into y'all's head so much, because it's the only setup you need to take. It is. It's the only trade setup you need to take. If you see price doing something, I used to always look for a reason to enter. And because I always wanted to trade so much, that's why I watched every YouTube video there was. That's why I tried so many different strategies, because although one strategy looked really great on paper and I liked it, if it wasn't happening in that moment, I needed the strategy to happen when I wanted it to happen. Right? If I want to trade, I need setups to be happening while I'm doing it so I can be executing and making money. Trading's not like that. It's like a strategy is going to tell you when to enter a trade, and most strategies work well. But it's like when you try to force that strategy and the time of the market is not setting it up, what happens is when it doesn't work, you're like, let me find another strategy that's going to work. It's always going to work. No strategy always works. And I'm telling you, this always works because it's not a strategy. If you get on the chart one day, whether you want to scalp on the 1 minute US 30 or you want to be a swing trader trading based off of the daily, if you see price has just made a lower low, mark up the structure, draw the trend line, mark up your previous high, and just wait for price to break trend, break structure, give you the 618, and then take your buy. And do that on every time frame. And I promise you, you will be a successful trader.
Yeah. And waiting for that particular setup, like you mentioned before, Isaiah, you're going to have less trade setups. There's no doubt about that. If you're filtering out all setups and only taking A setups, you're leaving the B, C, and D, and E and F setups out of the equation. Think about all the time that you're going to have to go do the things in life that you like to do. And because you're only taking the like A setups and you're winning the majority of your trades and you're using proper risk management, so you have the financial ability to fund all of that freedom of time you have. So you're spending less time on the charts and you're making more money so you can go live life the way that you want to. So like Jamal said, we're going to keep, just really drilling home this particular trade setup because it's literally can be the key in your ticket out of whatever you're doing now to be the funding for whatever you want to go do. So, spend time, rewatch this video. We've broken this trade setup down for the last 3 YouTube videos I've posted, and I'll post it in this one. So the last 4 videos will break down this exact trade setup, and all you got to do is put in the reps so you can train yourself to see this exact trade setup.
Yeah, I needed that. I needed that.
Yeah, just make the choice, stop, ask yourself, really sit down by yourself alone in a quiet room with no distractions and just have a real conversation with yourself. Like, how many more times am I going to do this? You just have to have that, that one-on-one with yourself and just make your mind up. No one can do it for you.
Yeah, appreciate it, man.
Yep. Hell yeah. Does anyone else have any questions before we wrap up the call? Anything you guys want us to cover? Any generalized questions?
I'm good, man. That's a lot to take in. I got some notes to go over. So
Hell yeah. Well, I appreciate everybody that got on here. And then if you guys think of any other questions from now till Friday's call, just throw that. If you're in the Discord community, throw it in the Friday Q&A chat so we can make sure to cover those for you. And then I'll share the YouTube link to this video in Discord in the next probably half hour because it'll take some time to encode the video and get it on YouTube. But as soon as it's loaded, I'll paste the link in here for you guys in Discord.
Yeah. Well, y'all have a great night. Hopefully there's some value in there. I know I went over a lot and I went over it quickly. So please rewatch it if you have questions about it. Pause it, play it, pause it, play it, master it.
This is your next ebook.
Yep.
It's good stuff, man. No joke. It's good stuff. Appreciate it.
Appreciate y'all.
yeah,
Yes,
much
sir.
love, man.
Yes, sir. Y'all have a
Yeah.
good one.
Take care, guys.
All right, guys.
Bye, Miley.
Happy holidays. Merry Christmas.
Merry Christmas.
everybody.
Merry Christmas, you filthy animals.